When we look at the natural world, we often try to find metaphors for how we live or, how we do business.
Right. We love a good nature analogy.
We do. And I think one of the most common ones we reach for is the caterpillar turning into a butterfly.
Sure.
It sounds so peaceful, right? I mean, we imagine this gentle slumber inside a chrysalis where a caterpillar just sort of, I don't know, sprouts wings and wakes up ready to fly. But the biological reality of that metamorphosis is, well, it's not gentle at all. It is a complete and total breakdown.
It's actually pretty violent when you look at the science of it.
It really is. The caterpillar literally releases enzymes that dissolve its own body. It reduces its entire existing architecture into this nutrient-rich cellular soup.
It completely destroys everything it used to be.
Yes, exactly. And the only things that survive that destruction are these tiny, highly organized clusters of cells called imaginal discs.
Right.
And those discs use that dissolved soup to build a completely new, vastly more complex organism. I mean, it requires the total surrender of the old identity to build the new one.
That is such a fascinating reality to start with, because it perfectly mirrors a fundamental problem in behavioral finance and corporate strategy. In the business world, true metamorphosis is almost non-existent. We see companies talk about transformation all the time, right?
Right, because it's a great buzzword.
It is. But what they really do is just try to tape wings onto the caterpillar. They do a minor rebranding, or they make a safe little bolt-on acquisition. But they absolutely refuse to tear down their legacy structures.
Because it's terrifying.
Exactly.
Yeah.
The reason for that is entirely psychological. I mean, if you were a management team, tearing down the empire you just spent a decade building feels unnatural.
It feels like a failure.
Yes, it feels like failure, even if it is literally the only path to long-term survival. So they cling to the old scaffolding. And as a result, the new structure they try to build on top of it is inherently unstable. It is extraordinarily rare to find an organization with the psychological discipline to intentionally dissolve its old identity, harness its accumulated capital, and build a fundamentally different, much larger architecture from the ground up.
Welcome to another episode of Delta Investments Deep Dive, where we go in depth and unpack our research on specific stocks and discuss the risks. I'm Marcus.
And I'm Sloan.
So, just to ground you in where we are recording this deep dive on March 30, 2026. And our focus today is on Ondas Inc., which trades under the ticker ONDS. But before we get into the weeds, I want to set the tone for you today. Today, we aren't just going to look at stock charts, and we aren't just going to read down a boring list of quarterly earnings and acquisitions. We are going to look at the psychology of scaling. We are going to examine the quiet, patient power of compounding. We are going to explore the behavioral realities of a company that is actively transforming its very DNA to survive in a rapidly shifting global landscape.
Right.
We are looking at a company that is right in the middle of that radical caterpillar-dissolving metamorphosis to become a major global player in autonomous defense, intelligence, surveillance, and reconnaissance, or ISR.
I think that framing is absolutely critical for you to keep in mind as we walk through this.
Yeah.
Because when you are looking at an organization undergoing this scale of transformation, the numbers on the balance sheet are really just the exhaust fumes of human behavior.
Oh, I love that. Exhaust fumes.
Yeah, the financial metrics are just the trail left behind by strategic discipline or, the lack thereof.
Right, which we see all the time.
Exactly. The real story here is about how a leadership team navigates the immense psychological burden of exponential growth.
And the dangerous temptations that come with massive influxes of capital.
Yes. And it is about how they are anticipating the survival requirements of a world that is fundamentally changing right beneath our feet. I mean, we are talking about infrastructure today, but we need to move away from the idea of infrastructure as just concrete bridges and steel beams. We are looking at the infrastructure of a future, which is mostly invisible, heavily autonomous, and entirely driven by software.
So let's start by unpacking that macro environment. Because if you don't understand the shifting landscape of global defense, none of the financial numbers or the strategic moves we're going to talk about will make any sense.
No, they'll just look like random data points.
Exactly. For the better part of the last century, national power and defense were defined by massive, highly visible assets.
Right, the big stuff.
Yeah, the nation wanted to project strength to its adversaries. It built a multi-billion-dollar aircraft carrier, surrounded it with destroyers, and sailed it across the ocean. Everyone could see it. The entire psychology of defense was rooted in intimidation through sheer physical mass. It was about being big, being loud, and being undeniable.
And for a long time, that worked.
It did.
But that old paradigm represents a massive concentration of capital into singular, highly vulnerable points of failure. As we look at the landscape today, and particularly as we have moved into 2026 here, we are seeing a quiet but absolute revolution in how security operates. The paradigm has shifted violently away from the massive invisible toward the persistent and the invisible. Modern defense is no longer defined by the aircraft carrier. It is increasingly defined by persistent surveillance that you can't even see. It is defined by stratospheric platforms floating silently at the edge of space. And it is defined by AI-driven autonomous borders where thousands of interconnected sensors and drones are operating continuously without direct human intervention.
We really saw this shift break into the public consciousness a few years ago. I mean, if you remember looking up at the sky or watching the news in early 2023, the Chinese high-altitude balloon incident was a massive psychological watershed moment.
Oh, completely. It changed the conversation overnight.
It really did. Because before that happened, the public, and frankly, a lot of traditional defense analysts, viewed the stratosphere mostly as a scientific domain.
Right, a place for weather balloons.
Exactly. That area between 50,000 feet in low Earth orbit was for atmospheric research. But when that massive balloon drifted slowly across the continental United States, it fundamentally altered the psychological perception of security for the average person.
It made the invisible threat visible.
Yes. It took this highly theoretical thing and made it incredibly visible. It proved that the airspace way above our commercial jets wasn't just empty space.
No, it's a highly contested zone for persistent intelligence gathering. That incident was a profound wake-up call, but it is really just one symptom of the underlying why driving this shift. If you look at the economics of conflict around the world right now, we have entered a period defined by low-cost technologies like loitering munitions, what the media often calls kamikaze drones, or small, commercially available quadcopters that have just been retrofitted for combat.
The stuff you can buy off the shelf.
Right. The fundamental math of warfare is broken down. We are now in a reality where a drone that costs maybe $2,000 or $3,000 can easily incapacitate a heavy armored vehicle or a radar system that costs $10 million.
I want to pause on that math for a second because it is so crucial to this whole deep dive.
It's the whole ballgame.
It is.
Yeah.
If you are a defense minister and your adversary is launching a swarm of $2,000 drones at your infrastructure, you cannot sustainably respond by firing a $2 million interceptor missile at every single one of them. You might win the skirmish, but you will bankrupt your country in a week.
That is the exact economic trap of the old paradigm. The cost-exchange ratio is completely inverted. The response to a distributed low-cost swarm cannot be a monolithic billion-dollar piece of hardware. The economics of long-term survival demand a completely different architecture.
It has to scale.
Yes, the response has to be equally scalable, it has to be autonomous, and it has to be omnipresent. You have to counter a network with a better, smarter network.
Which is incredibly hard to build.
It is. And that is the specific psychological and strategic realization that Ondas recognized. They realized that the future belongs to the entity that can deploy and manage a vast, interconnected web of smaller, smarter assets.
Which brings us to a phrase that permeates all the research we've done on this company, and it's this concept of the system of systems.
Oh, yes. The ultimate jargon.
Right. To the average investor, system of systems sounds like the ultimate corporate buzzword. It sounds like something a consultant charges you $1 million to put on a PowerPoint slide. But it actually represents a very real, very difficult evolutionary leap in infrastructure. Ondas isn't just trying to sell a single type of drone or a single ground sensor.
Because if they were doing that, they would just be another hardware vendor in a race to the bottom on pricing.
Exactly, a commodity business.
Instead, they're trying to build a multi-domain ecosystem, something that spans the dirt, the lower airspace, and the stratosphere simultaneously.
To really wrap our heads around why a system of systems is so valuable, we have to stop thinking about individual machines and start thinking entirely about networks.
Think about how a biological ecosystem survives.
Let's use an analogy here because I think it helps ground the abstract tech. Imagine you were walking through a massive old-growth forest. Above the ground, what do you see? You see individual oak trees, pine trees, bushes, maybe some mushrooms popping out of the dirt. To your eye, they all look like completely separate, distinct entities. They look like they are competing with each other for sunlight and water. But if you look underground, below the soil, There is a vast, invisible mycelial network.
The fungal threads.
Exactly. It is a web of microscopic fungal threads that connects the roots of almost every single plant in that forest.
That is a brilliant way to visualize it, because that underground mycelial network is actually acting as a decentralized brain for the entire forest.
It's alive.
It is. It isn't just sitting there. It is actively shuttling nutrients from a mature tree sitting in the sunlight over to a young sapling struggling in the shade. And if a group of insects starts attacking one cluster of trees, those trees send chemical warning signals through the fungal network, which prompts the other trees miles away to proactively raise their chemical defenses.
That's incredible.
The mushrooms you see above ground are just the fruiting bodies. The true intelligence, the actual survival mechanism of that environment, is the invisible connective tissue beneath the soil.
And if we map that forest analogy directly onto the modern intelligence landscape, it starts to make perfect sense. A tactical quadcopter drone, an unmanned ground vehicle rolling along a border fence, and a stratospheric balloon floating 60,000 feet in the air. Those are just the fruiting bodies. They operate in completely different environments. To an outside observer, they look completely unrelated. But what Ondas is attempting to build is the mycelial network.
The underground web.
Yes, the artificial intelligence, the software, the command and control data links, that is the invisible connective tissue, tying all those disparate hardware nodes together.
And that is a monumental shift in how we assign value to defense and infrastructure. Well, for 100 years, we assigned all the value to the physical asset. We cared about how thick the armor plating was or how powerful the jet engine was.
The tangible things you can hit with a hammer.
Exactly. But in this new reality, the physical machine is becoming commoditized. The true value, the ultimate competitive moat that an investor should care about, lies in the integration. It is the ability to take thousands of different autonomous nodes, collecting millions of data points, and synthesize them into a singular, clean operational picture.
Because the customer doesn't care which specific camera caught the threat.
No, they don't care at all. They just need the network to identify the anomaly, verify it, and propose a solution before a human even realizes there is a problem.
So we've established this macro environment. We have a world shifting from massive visible hardware to invisible interconnected networks. But building a global mycelial network that spans from the ground to the edge of space requires immense patient capital. It requires a level of financial engineering and risk tolerance that most companies simply do not possess.
It's a huge burden.
It is. So let's transition via the friction of that reality. You have a massive vision, but how do you actually pay for it? This brings us to the financial realities of Ondas, and specifically their FY 2025 numbers, which are, frankly, staggering.
They really are. When you look at the 2025 financials, you are looking at a company undergoing a severe structural break from its own history. They reported record revenue for the year of $50.7 million. Just to put that in context, that is an 840% year-over-year increase compared to 2024.
That's an absurd number.
It is. And it wasn't evenly distributed either. Of that $50.7 million, $30.1 million was generated in the fourth quarter alone.
I have to stop you there because this is the core of the psychological deep dive today. What happens to the psychology of a business when it grows 840% in a single year?
That is the million-dollar question, isn't it? Because if you are an investor looking at a chart, an 840% growth line just looks like pure euphoria.
Right. Everyone's popping champagne.
Exactly. It looks like a beautiful, frictionless hockey stick going up and to the right. But I can promise you, inside the walls of that company, on a random Tuesday morning in October, 840% growth feels like absolute chaos. It feels like every single internal system you built in January is completely broken and obsolete by June.
840% growth sounds incredible to the shareholders. But to the HR department and the supply chain managers, it usually just feels like trying to build an airplane while you were in a vertical nosedive.
That's exactly what it is.
Because if you are building complex, mission-critical autonomous systems, things like their Iron Drone or the Optimus System, you are dealing with thousands of highly specific components.
Right.
Suddenly, your procurement team has to source 8 times as many microchips, your manufacturing line has to run 3 shifts instead of 1, and your quality assurance team is stretched to the absolute breaking point.
And you cannot afford a single drop in quality. And that is why growth of that magnitude is intoxicating. But without immense behavioral discipline, it is actually highly toxic.
It can kill a company.
It destroys companies all the time. They grow too fast, they lose quality control, their cash conversion cycle breaks down, and they implode.
Right.
So when we analyze a company growing at 840%, we aren't just cheering for the top line revenue. We have to look for evidence of discipline amidst the chaos. We have to look for sanity under the hood.
And where do we find that?
The most telling metric in these 2025 financials, the one that signals survival, is their gross margin.
Break that down for you and me. Why is the margin the signal of survival here?
Well, in 2024, their gross margin was a meager 5%.
Oh, wow.
Basically, for every dollar of hardware they sold, it was costing them 95 cents just to make it. That is not a sustainable business model. That is just trading dollars.
You're barely keeping the lights on.
Exactly. But in 2025, as revenue exploded by 840%, their gross margin improved dramatically to 40%.
That is a massive operational shift.
It is the defining metric of successful scaling. It tells you the story of how the operations are handling the volume.
Right.
When a margin expands that rapidly alongside revenue, it means the fixed manufacturing costs, the factory lease, the core engineering team, are being successfully absorbed by the higher volume of units going out the door.
Economies of scale.
Exactly. It also indicates that their product mix is likely shifting. They aren't just selling low-margin metal and plastic anymore. They are selling higher-margin software and integrated solutions. That margin expansion is the proof that the 840% growth isn't just empty calories, it is structurally sound compounding.
But as any seasoned investor knows, the market is a very cruel master. Past performance is instantly priced in.
Always.
The reward for surviving an 840% growth year and getting your margins in order is simply the expectation that you are going to do it again, only bigger.
Oh yeah, the treadmill speeds up.
And this brings us to the crushing weight of future expectations. Management raised their 2026 guidance, and they elevated their revenue target to at least $375 million.
Wow.
So they just survived a jump to $50 million, and now they're staring down the barrel of a near seven-fold increase in the next 12 months.
I think we have to be very careful about how we frame a projection like that.
How so?
Announcing a $375 million target after a $50 million year is not a victory lap for the executives. It is a heavy, sobering assumption of responsibility.
The pressure must be immense.
It is. When a management team steps up to a microphone and projects that kind of hypergrowth, the psychology of their investor base fundamentally shifts.
Right.
The investors transition from a posture of hope, patience, and speculation to a posture of strict, unforgiving accountability.
The honeymoon is over.
Completely. The narrative changes overnight from, hey, let's see what this cool technology could be, to you explicitly promised us $375 million. Now you have to deliver it or we will abandon you.
The grace period evaporates entirely. They're no longer a plucky startup with a neat idea. They are now expected to be a scaled, ruthless operator. And to hit a target of $375 million in an environment dealing with physical hardware and global supply chains, you need an incredible amount of fuel. You need capital.
Lots of it.
And Ondas went out and secured that fuel in a way that is genuinely shocking for a company of their size in this sector.
Yes, they did.
In January of 2026, they executed a massive $1 billion capital raise. And what really stands out in the research is that this raise priced above the market at $16.45 per share, which represented a 17.5% premium to their closing price at the time.
A huge vote of confidence.
Absolutely. Following that raise, the company was left with a pro forma cash balance of approximately $1.5 billion.
That figure, $1.5 billion in cash sitting on the balance sheet, is the gravitational center for everything this company is going to do over the next decade. In the defense and aerospace sector, you are constantly battling long development cycles, incredibly unpredictable government procurement timelines, and intense capital constraints. Having $1.5 billion in liquidity is a profound, almost unfair competitive advantage against their peers.
I hear that, and I understand the theoretical advantage. But I have to push back on this because human nature is what it is, and we have seen this movie before in the financial markets.
Oh, many times.
Historically, handing a management team $1 billion in cash is a really great way to watch them set it on fire. They get bloated, they buy a bunch of overpriced vanity projects, they rent nicer offices, and they lose their edge. So I have to ask, when a company raises $1 billion, does that capital actually give them freedom, or does it introduce an entirely new, heavier set of expectations? How hard is it to actually stay disciplined when you suddenly have $1.5 billion in the bank?
That is the perfect question, and it highlights the paradox of abundance. You are absolutely right to be skeptical because sudden abundance is incredibly
It's
dangerous.
like winning the lottery.
Exactly. We see this in behavioral finance all the time. It is the corporate equivalent of the lottery winner syndrome. When financial constraints are suddenly removed, the temptation for recklessness skyrockets. The hardest thing for a management team to do when they are sitting on $1 billion is to act as if they are still poor. They literally have to manufacture artificial constraints within their corporate culture to maintain their operational hunger.
So where is the evidence that they are maintaining that hunger rather than just cashing in on the hype?
It comes down to understanding why the customer demands that balance sheet. You have to look at this through the lens of the buyer.
Okay, walk me through that.
In one sense, the $1.5 billion does provide freedom, but more importantly, it is the ultimate survival mechanism for winning contracts. As management noted, having a balance sheet of this size makes them the buyer of choice in a highly fragmented market. But think about the end customer governments and defense ministries. When a government is looking to award a massive, multi-year, multi-hundred million dollar infrastructure contract, their biggest fear isn't that the technology won't work perfectly on day one.
What is their biggest fear?
Their biggest fear is that the vendor will go bankrupt in year 3, leaving the government with half a system and no replacement parts.
Ah, right. So the customer isn't just buying the drone or the software. They are buying the financial certainty that your company will actually exist a decade from now to service the contract.
Exactly. A $1.5 billion cash pile instantly elevates Ondas' status from a risky, unproven vendor to a trusted prime contractor. It signals absolute permanence to the market.
It de-risks the purchase for the government.
Completely.
Right.
But it also introduces that heavier set of expectations you mentioned, because every single dollar they spend now is scrutinized by the market, not just for its necessity, but for its return on invested capital. The market will punish them severely if they waste that war chest.
And part of demonstrating that discipline to the market is mapping out exactly when this whole endeavor becomes self-sustaining.
Yes, the path to profitability.
Right. They have laid out a very patient, specific roadmap to positive EBITDA. They are targeting product-level profitability by Q3 of 2026. Then, segment-level profitability for their Autonomous Systems division by Q3 of 2027. And finally, company-wide profitability by Q1 of 2028.
That timeline is a fascinating study in investor psychology. It requires an investor base that truly understands long-term survival and the mechanics of compounding.
You can't be looking for a quick flip here.
No, you cannot expect instant gratification here. To illustrate why that patience is necessary, let's look at the reality of their fourth quarter. They reported a net loss of $101 million.
Now, if you were a retail investor glancing at a headline and you see a company with $50 million in annual revenue reporting a $101 million loss in a single quarter, your immediate instinct is probably to panic and run the other way.
Of course it is. A surface-level reading of that number looks terrifying.
It looks like the company is bleeding to death.
Right. But when you look under the hood of that $101 million loss, you see that it was heavily driven by an $82.2 million non-cash charge related to the revaluation of warrant liabilities from a previous financing round.
Let's translate that for a second, because reevaluation of warrant liabilities makes people's eyes glaze over. For anyone listening who isn't a CPA, what does that actually mean in plain English?
Simply put, it is a paper penalty. When the company raised money previously, they issued warrants, which are basically options for investors to buy stock at a certain price in the future. Because Ondas' stock price went up significantly, the theoretical value of those warrants increased. Due to complex accounting rules, the company has to record that increase in the warrants' value as a loss on their income statement. But no actual cash left the company's bank account. It is purely an accounting quirk. It is not $82 million in cash being set on fire in a parking lot.
Right. So the headline loss is scary, but the underlying reality is much less severe. However, even beyond that non-cash charge, they are burning real cash to build this infrastructure.
Yes, they are.
Their operating expenses rose significantly.
Yeah.
But again, we have to look at this through the Housel lens of compounding. Building a global, multi-domain autonomous intelligence platform is not like building a consumer software app.
No, it's not.
You can't just throw 3 guys in a garage with laptops and a cloud server and emerge 6 months later with $1 billion product. You are dealing with atoms, not just bytes.
Exactly. Building this requires establishing physical manufacturing lines. It requires securing highly vulnerable global supply chains for rare earth metals and microchips.
Which takes years.
Yes, it requires acquiring deeply specialized, expensive engineering talent. And it requires navigating the incredibly complex Byzantine world of international defense regulations. All of that requires massive upfront capital expenditure.
It is the cost of admission. If you want to build the mycelial network that spans the globe, you have to invest the energy to grow it underground for years before you ever see a single mushroom pop up above the soil.
And that is why staying the course for a 2028 company-wide profitability target requires immense discipline from both the management and the investors.
You have to be patient.
You do. You have to stomach the short-term accounting noise, and you have to accept the necessary operating cash burn in exchange for the long-term compounding effect of owning the dominant platform in a critical global industry.
Which brings us to the most critical pivot point in our analysis today. So they have $1.5 billion in cash. They have a market demanding a massive seven-fold revenue jump in 1 year to hit that $375 million target.
Right.
You simply cannot achieve that kind of hypergrowth organically.
Right.
You can't just hire a few more salespeople and expect your revenue to septuple. You have to buy your way into the ecosystem. You have to go out and plant seeds. And the speed at which Ondas deployed that capital is staggering. In the first quarter of 2026 alone, they spent over $550 million.
This is where we see the physical manifestation of that metamorphosis. This is where they transition from being a holding company with a few good ideas into an integrated operating platform.
But the way they spent that $550 million is what separates them from a company that is just recklessly spending cash. Let's be honest, though. If I just read you the shopping list of companies they acquired, it looks like absolute chaos.
It looks a bit random on the surface.
It really does. In a matter of months, they bought a balloon company, an earth-moving bulldozer company, a missile defense company, and a UK drone engine manufacturer. If you don't understand the strategy, it looks like a management team with $1 billion, just behaving like a kid in a candy store buying random toys. I want you to make this make sense for me. How does a company that makes bulldozers talk to a stratospheric balloon? And why did Ondas spend $500 million putting them under the same roof?
That is the exact friction point that trips up a lot of analysts. If you view these acquisitions as isolated hardware companies, it makes no sense.
Right.
But if you view them through the lens of building a resilient, anti-fragile ecosystem, it is actually a masterstroke of capital allocation.
Anti-fragile, I like that.
Yeah, in complex systems, long-term survival depends heavily on diversity and interconnectedness. If your entire business model relies on a single technology or selling into a single geographic market, your company is incredibly fragile.
A single point of failure.
Exactly. A sudden shift in export regulations or a competitor launching a slightly faster drone can wipe you out overnight. By intentionally deploying this capital across distinct operational domains, Ondas was engineering anti-fragility into their DNA.
So let's group these acquisitions by their strategic intent, rather than just reading a list so we can solve this mystery. Let's look at the first domain they secured, which is access and the high ground. This involves two major acquisitions. First, Mistral Inc., which they acquired for $175 million. The key piece of research here is that Mistral unlocks access to a massive $1 billion in Department of Defense IDIQ contracts.
IDIQ is a crucial term here. It stands for indefinite delivery, indefinite quantity. In the labyrinth of the U.S. defense world, securing an IDIQ contract is essentially the holy grail. It means your company has been fully vetted, security cleared, and established as a trusted vendor. It allows the government to place continuous orders for your products without having to go through a massive multi-year competitive procurement process every single time. Mistral provides Ondas with an immediate, pre-cleared superhighway right into the heart of the U.S. defense market.
So it's a massive accelerant for revenue.
Furthermore, Mistral brings deep expertise in those loitering munitions we discussed earlier, the attritable precision strike systems. It embeds Ondas directly into the offensive side of the equation, not just the passive surveillance side.
Then, within that same domain of access and high ground, we have the acquisition of Worldview Enterprises. This brings in the stratospheric balloons, what they call stratolites. This represents an entry into an entirely new operational domain.
It is the ultimate high ground. We talked earlier about the macro shift from visible to invisible infrastructure. Operating in the stratosphere perfectly encapsulates this philosophy. The stratosphere is roughly 50,000 to 75,000 feet above the surface of the Earth. It is way above commercial air traffic and chaotic weather systems, but it is well below the orbit of expensive traditional satellites. For decades, the military largely neglected the stratosphere as an operational layer because the engineering challenges of surviving those extreme low temperatures and high winds were considered too difficult to solve cost-effectively.
But the strategic advantage of solving it is undeniable.
Yeah.
Though I have to ask, why not just use satellites? We have thousands of them up there now.
It comes down to physics and economics. A low Earth orbit satellite travels at roughly 17,000 miles per hour. It passes over a target on the ground for maybe a few minutes before its orbit carries it away over the horizon. If you want continuous coverage of a target with satellites, you have to launch a massive constellation of them, which costs billions of dollars.
Very expensive.
On the other end of the spectrum, a low-flying tactical drone can only stay aloft for a few hours before its battery dies or it runs out of fuel. A stratolite balloon, however, can navigate the wind currents in the stratosphere and literally loiter over a specific geographic area like a contested border, a maritime choke point in the Red Sea, or a conflict zone for weeks or even months at a time.
Wow, weeks at a time.
Exactly. It provides persistent, unblinking surveillance at a fraction of the cost of a satellite launch. By acquiring Worldview, ONDS bridged the massive gap between their terrestrial drones and the edge of space. They expanded their sensory network vertically.
Okay, so that covers the high ground.
Right.
Let's move to the second strategic domain, defense and engineering. Here we see the acquisition of Bird Aerosystems for $132.3 million. Bird brings advanced missile protection systems and airborne ISR. And critically, from a financial compounding perspective, Bird came with an immediate $79 million backlog of signed contracts.
That is where the financial pragmatism balances out the futuristic long-term vision. While you are busy building the invisible architecture of the 2030s, you still have a fiduciary duty to report earnings to your shareholders today.
You still have to pay the bills.
Exactly. Acquiring a mature company with a $79 million backlog ensures tangible near-term compounding. It provides immediate, highly visible cash flow that helps absorb the massive integration costs of the broader platform.
Makes sense.
And from a technological standpoint, Bird's airborne protection systems add a vital defensive shield. If you are going to deploy a network of autonomous drones in a contested, hostile environment, you need to ensure they can survive being shot at.
Right. Also in that engineering domain, they acquired Indo-Earth, moving for $60 million. This adds heavy engineering capabilities and comes with its own $140 million in contract visibility.
Right, the terrestrial side.
So they're securing the low ground, the heavy dirt work.
But the third strategic domain is where things get really interesting from a geopolitical standpoint, and that is propulsion and sovereignty.
Very important.
They acquired a company called Rotron Aerospace for $39.9 million. Rotron is a UK-based developer of advanced aero engine and propulsion technologies.
The Rotron acquisition might be the smallest dollar amount on the list, but structurally it is one of the most vital seeds they planted.
Why is that? In the world of autonomous systems, propulsion is a massive engineering bottleneck. If you use electric batteries for a drone, the energy density is terrible. The batteries are heavy, and the drone can only fly for maybe an hour. If you want a drone to fly a long-endurance autonomous strike mission, say flying for 12 hours deep into hostile territory, you need heavy fuel engines. Rotron builds some of the most advanced heavy fuel rotary engines in the world. They fundamentally changed the payload-to-range math for Ondas's drone fleet.
But there's a secondary layer to that acquisition beyond just the engine physics, right? It has to do with where Rotron is located.
Exactly. Rotron is a highly strategic seed planted in European soil. It establishes a physical, recognized footprint within the UK Ministry of Defense and, by extension, broader NATO programs. It is huge. In global defense contracting, sovereignty is paramount. Nations do not want to buy critical security infrastructure from a foreign entity with no local ties.
They want domestic production.
Exactly. They want to buy from companies that have a domestic presence, employ local workers, and contribute to their own industrial base. Rotron gives Ondas a credible domestic face in one of the most important allied defense markets on the planet.
Okay, so let's zoom back out. We've solved the mystery of the shopping list. We have Mistral for U.S. government access, Rotron for UK sovereignty and engines, Worldview up in the stratosphere, bird for missile protection, and Indo moving the Earth. Returning to our forest analogy, these are all incredibly impressive giant oak trees. But a collection of trees is just a tree farm. It isn't a true ecosystem until you add the mycelial network. How do you actually get the German Earth mover, the US balloon, and the UK drone to talk to each other securely and autonomously? This brings us to the connective tissue of this entire metamorphosis, the strategic alliance with Palantir and the Onboard joint venture.
This integration is where the corporate metamorphosis reaches its absolute operational peak. The strategic alliance with Palantir is the defining mechanism that transforms Ondas from a holding company of disparate hardware assets into a unified, intelligent hegemon.
The digital brain.
Yes. Palantir's AIP, the artificial intelligence platform, is the digital brain that integrates all of these newly acquired limbs.
The research details that they are utilizing a massive suite of Palantir tools. They are using warp speed to untangle their complex manufacturing and supply chains. They're using Foundry for massive data integration across these different companies. They're using Maven for advanced AI-driven command and control. But the piece that really stands out is a new edge computing program specifically developed for this partnership called Skyweaver.
Skyweaver is the technical solution to the nightmare of integration you mentioned earlier. It is a fundamental paradigm shift in how intelligence operates.
How does it change things?
Well, historically, if you had a drone taking pictures, it collected raw data and beamed that massive data file back to a central command post. A human analyst would sit in an air-conditioned room, stare at a screen, try to interpret the blurry video feed, and then make a decision on what to do.
But the problem with that is latency. By the time the video buffers, the analyst recognizes a threat and sends command back, the target has already moved or the drone has been shot down. The human is the bottleneck.
Precisely. It is too slow, and it requires too much bandwidth, which is easily jammed by adversaries. Skyweaver solves this by pushing the AI processing power directly onto the edge devices.
Meaning the drone itself.
Exactly. It puts the brain onto the Stratolite balloon itself or onto the tactical drone. With this Palantir backbone, the system moves from just collecting dumb data to delivering unified, autonomous decisions. Imagine a scenario. An Ondas drone detects an anomaly on the ground. The Skyweaver AI on the drone instantly verifies it is a threat. The drone then communicates laterally, machine to a Stratolite balloon 60,000 feet above it to get broader geographical context.
Just talking to each other directly.
Yes. The balloon then autonomously coordinates with an unmanned ground vehicle to move in and neutralize the threat. All of this happens in milliseconds, completely without human intervention. The human operator at the base simply receives a synthesized alert of what the network discovered and the action it already took or recommends taking. The network itself has become a conscious entity.
That is incredible and slightly terrifying if you really think about the implications of autonomous intelligence. But there's one final piece of this structural realignment we need to cover, which is the Onboard joint venture. This is a 51% owned venture with Heidelberg in Germany. We touched on sovereignty with the UK Rotron acquisition, but this seems like a much larger play for the European continent.
It is a massive play, and it circles back directly to the behavioral realities of global procurement following the geopolitical shocks of the last few years.
Yeah.
If the war in Ukraine taught European nations anything, it is that they can no longer rely entirely on external foreign supply chains for their critical defense infrastructure. There is a massive premium being placed right now on localized sovereign manufacturing.
You can't just build a highly classified drone in Florida, put it in a cardboard box, ship it to Germany, and expect to win a €1 billion defense contract.
You absolutely cannot. The Onberg joint venture is a massive strategic seed planted to secure localized European manufacturing capability at scale.
Because Heidelberg is a big deal there.
Yes, by partnering with Heidelberg, which is a deeply established, highly respected German industrial giant, Ondas ensures that they adhere to the strict sovereignty requirements of the European Union defense market.
They become a local player.
Exactly. They aren't an American outsider trying to aggressively sell into Europe. Through Onberg, they are a domestic manufacturer deeply embedded in the European industrial base. It is a masterful navigation of the psychological and geopolitical barriers to entry.
And to cement this entire transformation, to finally put the nail in the coffin of the old caterpillar and emerge as the butterfly, we saw the outward manifestation of this new identity.
The rebranded.
Yes, the company officially rebranded from Ondas Holdings to Ondas Inc. And they physically relocated their corporate headquarters to West Palm Beach, Florida.
It is easy to write that off as a minor administrative detail or a marketing gimmick.
Yeah.
But in the context of behavioral finance and corporate psychology, shedding the old identity is a profound and necessary step.
Words matter.
Words matter. The word holdings implies a passive collection of disparate assets. It implies a financial engineering vehicle managed by bankers. By dropping holdings and becoming Ondas Inc., and by physically moving their center of gravity to a new headquarters, they are signaling something very specific to the market, to their employees, and to their future customers.
What are they signaling?
They are declaring that the dissolution of the old structure is complete. They are no longer a collection of parts. They have emerged as a singular, integrated, autonomous intelligence company. It is the final outward marker of a completely new era.
So as we pull back and wind down this intensive analysis, what does all of this mean for you, the listener? What does this unified platform mean for our broader understanding of modern infrastructure and defense?
That's the big question.
We've journeyed all the way from the violent biological metaphor of a dissolving caterpillar through the invisible mycelial networks of the forest. We've talked through the intense psychological pressures of 840% growth and the burden of managing a $1.5 billion balance sheet.
And we've seen them plant those seeds.
Exactly. From the heavy dirt of Germany all the way up to the freezing edge of the stratosphere.
I think what it means is that we as observers and investors have to fundamentally recalibrate our understanding of value and security in the 21st century.
Yeah.
The era of measuring a nation's strength by counting the number of visible steel machines on a battlefield or counting the number of human guards standing at a perimeter fence is completely over.
It's obsolete.
It is. The new reality is that the most powerful, most indispensable infrastructure in the world is the infrastructure you cannot see. It is the software-defined intelligence that anticipates a threat hours or days before it materializes. It is the network operating persistently and autonomously across every domain simultaneously. Ondas has positioned itself not just to be a participant in that new reality, but to be the foundational architecture that supports it.
Which leaves us with a quiet, lingering thought about the nature of defense and investing for you to mull over. When the infrastructure protecting a nation, or a major commercial airport, or a vital shipping lane becomes entirely invisible, software-defined, and autonomous, how do we actually measure the true value of that security?
It's hard to put a price on that.
It is. The true power of compounding isn't just found in an expanding balance sheet or an improving gross margin quarter over quarter. The ultimate form of compounding is building a system so deeply integrated into the world's functioning, so pervasive and yet so invisible, that it becomes utterly indispensable for survival.
That is the truest essence of infrastructure. You only ever noticed it when it breaks or when it's gone, but you absolutely cannot live without it.
We hope you enjoyed this deep dive, and thanks for listening. Please follow us and subscribe on your favorite platforms. Don't forget to check out our Substack, Delta Investments. Until next time.
This analysis is based on publicly available information and does not constitute financial advice. Always conduct your own research before making investment decisions. By listening to this podcast, you agree that you are in charge of your own decisions and risks and that you are solely responsible for any investment decisions you make.